Christmas. Tonight is Christmas Eve, and in our neighborhood, we put out the candles along the driveway, and the whole neighborhood in Waterbury is like that. It's just amazing sight. So I'm looking forward to lighting up the candles tonight. And the topic we talk about is rather interesting. Unlike candles, unlike Christmas trees, it is intangible. Intangible asset is our topic today. We want to talk something abstract, something not you can feel and touch, not your gift package that you are going to open. It is not there, but it is there. It's so important for a business, so we want to particularly talk about what is intangible asset and also how to create intangible asset in your business, or how to know you have it already or you are paying for an intangible asset. So let's just kind of dive in that. And you see our website, right? And this is our website, and you can always make appointment right here with us. And so we can meet you right away with the availability. And here is where you type into, you click on the appointment, you will see the partners right here, and they are the one that you can book time with. But if you just want to talk and you have a question, you know how to reach us on the email. That's the way to get a hold of us as well. If you don't have time to hear our talk right at this moment, you can go to YouTube channel. You will find what we talked about today. So if you type in intangible asset, you will bring up the webinars that we just did today. Now, let's get going with what we scheduled to do. And I will share the slide with you. And let's just go with that. All right, about intangible asset, and before every time we showing our slides, we always talk about our firm. I will skip this one today because you know about us, right? And the most impressive one about us is we do speak 10 different languages in our staff. We have 40 staff, 40 of us. We speak 10 different languages. And I have 2 books on the internet as of today. One is Appointment with Ying at 8 a.m. The other one is Appointment with Ying at 10 a.m. Go find out what I do in this book. I am working on the 3rd one. It's Appointment with Ying at 2 p.m. Maybe in that book I will write about how to wake you up, because those are the times you can get very lethargic in the day. But 2 p.m. is about expanding your business beyond yourself. So you can have a nap while your business is expanding. That's interesting, right? No responsibility disclaimer. This is something that we always want to remind our listener, remind our audience, and really knowledge on the internet is so fluid. And you want to make sure that you do your due diligence before you apply the knowledge into your real tax forms, right? All right, what are intangible assets? Intangible assets are non-physical assets that provides value to a business. And, you can sit here thinking, oh, how could they provide value to a business if they are non-physical? Of course. If you have a franchise and you open up a Subway, and before you open the Subway, the word itself, the name itself already provided value to you, because people walking into the door, they know exactly how you do their sandwich. That's exactly how they want it to be done. So we're talking about non-physical assets. Not like your gift, right? Under Christmas trees, what Santa carries on his back, those are physical assets or things you can feel and touch. And intangible just means it is there, it is in the air, and you have to really define it. Unlike tangible asset, buildings, machines, intangible cannot be touched and seen, but they often play a critical role in a company's success. The tax treatment of these asset, this intangible asset, is also complex, and we will give you the general ways how it was done, but it is not something that fall into your buildings, your machineries, things like that. It doesn't need cost segregations for intangible asset. And determine whether it is acquired intangible asset or it is created intangible asset, or is something that you're benefiting from. It is always not black and white. So it is something you need to know so you can consciously inquiry about that with your CPA. I always say that half of the problem is solved when you actually know what is your problem. And this is why we bring those knowledge to you. Not we want you to be an expert for intangible asset. We just want you to know the buzzword so you can talk to your accountant, talk to your CPA, and the one who fill up your tax forms and figure out whether there's treatment that's suitable for this. Now, I want to give you kind of a laundry list of intangible asset. So what they are. I know you may not understand. You may not say that, whoa, why is prepaid expenses an intangible asset? Maybe that prepaid expenses is something that creating value for your ongoing business. License to be intangible, that you may be more in sync with, and franchise, copyright, trademark, those I highlighted right there are the most common one. So here, the most common one, further explained: goodwill, patents, trademarks, copyrights, franchise, license. Those are the common ones. Those are the ones you see on the market a lot. But just one thing I want to mention to you, that the goodwill part generally coming from someone created the intangible asset and sold it. The buyer, when you bought the business, then you would have a goodwill piece. That goodwill piece could be the client list, and it could be the way you do business. So it is going to be defined in a sales transaction. So a lot of these ones, like goodwill, is created in the sales transaction. But patent, trademark, all of these can be created by our business owner. You don't have to buy it. You create your own trademark, you create your own patents, and you create your own copyright. You define it. You hire the facilitator to get that done for you. For a restaurant, maybe you set up 3-4 restaurants already. You know that how exactly you prepare your sushi rice. It is such a secret that nobody knows, only you know. But if you do it in a certain way, the rice just tastes so different. That is your intangible asset, right? And what are the expenses related to intangible asset? Some example of expenses you might incur to acquire or to create intangible asset are subject to capitalization rules. And what it says here is that, yes, it is the money you pay to the lawyer. It is the money you pay to the CPA firm. It is meant to create intangible asset definition for you. And that is actually cannot be just write off as expense, especially if it is over 5,000. It is actually something you should capitalize it. Then you may ask me, how long do I have to capitalize it? It is 15 years, right? So that applies to the cost. Like these are the costs. And for example, obtaining, renewing, renegotiating, or even upgrade business or professional license, that could be your cost for the intangible asset. Modifying certain contract rights, that could trigger expense. Those expenses you cannot deduct, you need to capitalize it. And define or perfect titles to intangible property. And this, I have a good example at my last slide. What do they mean by define and perfect the title? And sometimes people invented something, they don't really know what to call it. They just knew that, it's no big deal. It is only a little Excel spreadsheet I created, and I don't tell people what I do, but I give them the result. That is a perfect intangible asset you have. You need to define it. You need to perfect the title. Then you can wrap it up as intangible asset. And when you sell it, and yes, it costs you a couple brain cells, but gonna cost the buyer a couple $1 million. So this is the intangible asset, the power of knowing how to define. And have you ever, I don't know where I got this story, but I know that in history, we don't have the color of blue. Blue is not a word. It is not a color that was defined until someone named that type of mixture is blue. So they create the English word of blue. And blue represents blue. Today we know it. Why do we know it? Because we had language to define it, right? And if we don't define, if we don't have eating disorder defined, we don't know why people are anemic, why people are bulimic and anorexia, and all of these things we don't understand. But we had the word to define it. Same thing. Intangible asset needed definition. And to discover that definition sometimes takes someone else rather than the business owner to do it, because other people can see it clearly, so they can charge you a big time of money and define your intellectual property, but you know what? You forever have it. You can sell it. All right. So this is what expenses related to intellectual property. I want you to understand. Facilitation rules. There is IRS regulation generally categorize a amount as paid to facilitate the acquisition or creation of intangible asset. So facilitate is like the lawyer does it, right? When you buy a business, you have a goodwill, so they facilitate the acquisition. But facilitator can also get you created, get the intellectual property created. So that is the facilitation. Facilitation rules can affect any business and many ordinary business transactions. Example of the cost that facilitate the acquisition or creation of intangible, including payment to outside counsel, attorney, accountant, outside consultant, outside counseling, and all of these things. People coming in to help you define that intellectual property, and that facilitation is a cost. That cost needs to be amortized. So that's what we're talking about. Amortization of intangible assets. So intangible asset, such as patent, trademark, goodwill, we talked about that, right? And the rule is 15 years. It's Section 197. And under Section 197, intangible asset that qualifies as amortizable must be amortized over 15 years. You see? So it's a 15 years, 180 months. And you start that amortization in the months the intangible asset is acquired, or when the business activity generated income from that asset. No salvage value just means that you can't really, you're going to depreciate it down to zero, amortize it down to zero. There is no leftover values. The entire cost is spread evenly over the 15 years, so there's no salvage value. Not like your tractors, you bought it and you got a salvage value on the tractor, but not on the intellectual asset. Self-created intellectual asset. This is the piece that I want to dialogue with you, because you are the small business owners. You created your business. Even if you have a food truck business, you felt like you didn't create anything because you just do food truck like everybody else. And hold on to that thought. You actually created something, because all of your food truck has avocado signs on the top of the food truck, so that gives people an idea you're selling Mexican related food, because avocado was right on top of the food truck. So having that avocado displayed in certain way, having that avocado looking at certain colors, and having the avocado facing certain ways on the top of your food truck, that if I package it, if I facilitate this, creating this this intangible asset for you, you have an intangible asset because you know the color code is this way and you know it's facing this way, you know the size of it, you know how to screw it on the top of your truck. So all of that is your intangible asset. So you create intangible asset. So how to define your intangible asset? Folks, you understand what I'm saying, right? The expense you spend on create the intangible asset must be amortized. The intangible asset can generate income from your business operation. You, food truck, so you're selling tacos, you're selling burritos, and you got business. And every penny of the sale has something to do with the avocado on top of the food truck. So let me give you another example here. Dr. Smith produces a report in the summer to forecast snowfalls in the winter, like every year in the summer, and he created this thing, and he knew that how much of a snowfall in this area people are going to get. So he sell that information to company that needed that information. For example, the snow plowing company would like to know that information so they can budget the manpowers, they know how to approach the customer, right? And, just an example. So Dr. Smith can do that. The formula and the process he created is his intangible asset. To make sure that it is well defined, he spent $25,000 to facilitate and get it wrapped up, get it done. His operating company pays 20% of the sales to him personally because the intellectual property is his under his name. And so the operating company issue a 1099 miscellaneous income to him every year for using his secret Excel formula. And he received the income on his 1040. However, it is taxed at a lower rate. Why? Because it is not a self-employment income. It is just a regular royalty income. And his own company pays him, so he gets that income reported on the 1040. But what happened to his company? The company deduct that as expense to use the intellectual property of somebody else's, right? So if one day he sells his company, and he can do two things. He can sell the company, keep the intellectual property with him, so the person who bought his company would have to continue paying the 20%. That's just how his company gonna work, right? The second option would be that the purchaser, the buyer, would buy both operating company and his intellectual property. And then the company is one price, intellectual property probably gonna be several millions. So that is how this will be sorted out at the time of buy and sell. So Dr. Smith would end up with long-term capital gain because he sold his intellectual property, but the person who bought it would have an intellectual property on their book with the selling price, right? With the buying price, right? So he bought it for $2 million, so it's gonna sitting on the asset for $2 million. So the buyer would have to depreciate that for 15 years, am I right? So that is how accounting and tax works related to intangible. But what I want to wake up for your senses, because our webinar is really for small business owners. You are one of those small business owners. I want you to sit there thinking, what do you have as intangible asset? That you just did not define it. You just did not even think you have it. But now wake up to the fact that you have it. Then define it. Because once you define it, it has become a thing for you to sell. Without definition, it is not a thing. Santa not gonna bring intangible asset to your children. He has a thing. He gave to the child, right? So if you want to sell your business with a good price, intangible asset is a definition, is a thing that you need to make it happen. That way, people buy your restaurant, but they also have to buy your process. They also have to buy your secret recipe. They also have to pay you for that. Otherwise, it is just a restaurant without your operation secrets in there. So with that said, I allude you back to what I showed you in the very beginning, and this is our partners list. You can go online and book appointment with us, and we can answer your amazing questions because we want you to be so successful in business, and you will remember Community CPA in your journey because we walk you through from 8 a.m. starting your business to 10 a.m. growing your business. Then we go to 2 p.m. expand your business while you're having a nap. And then, of course, my fourth book is 6 p.m. where we talk about how to repurpose your life without working full-time. It's called a retirement. But that retirement thing is so negative, and it's not yet on my roadmap, so I'm just going to call it a book with no pages in there yet. We will get there eventually. All right, right now, we are still in tax planning season, and this is our tax planning service. If you're interested in tax planning, and contact us anyway, and we will be there for you. And remember, our firm, Community CPA, is really the only firm opens on Saturday. And, even today is a Christmas day, we're still getting through what we need to do. Our webinar is here, and we are giving you our knowledge. So I hope you appreciate us and understand the hard work we put in here is all for you. All right, folks, Merry Christmas for 2024, and I will see you around.